gone in this afternoon.
Testing. All right, I'm going to stop this there. Can the Zoom people hear me now? Yes. Fabulous. All right. Thank you all so much for getting my attention. Thank you for stopping me. I appreciate that. All right, let's try it again. All right, Moodle course, everybody's doing pretty well. There's a decent number of people in there. Let's talk about Joe. Joe, right? So Edna had the business. She had a bunch of cash income. Joe told her, it's okay, you don't have to report it. The IRS will never know. That is most definitely a violation of the standards of conduct, right? Because you have to prepare a return that is true, correct, and complete. And that includes reporting all of your income. All right, Joe, just like all of you, he went through training to understand what those volunteer standards of conduct are. He signed his volunteer agreement, promising to always follow those volunteer standards of conduct. And he deliberately did not do that, right? So he's prepared a false return in spite of knowing that he was not supposed to do that. Having done this at least once, right, that we know of, he may have done it before, you know, how could we ever trust him to do it right again? He's already promised to do it right and then turned around and done it wrong, right? We can't just stand over his shoulder for every single return to make sure that he does it right. He's already broken his promise to us. That means, unfortunately, he is not going to be able to volunteer with us. So he is going to be banned. He will not get to come back and help. For the intake interview and quality review quiz, question number 2 is tricky. I always get that one on purpose because the 5 most important words in science and in taxes are pay attention to detail. It is form 13614, not 31614, whatever it was that I put in there. There's a couple more questions that had a few other answers. So look at the photo ID information, look at the quality review team in publication 5101. But generally, especially for that last one, if you answered wrong, the people that did said that there should be more people involved in the review, which is a good idea. It's not required necessarily to have that preparer there, but it is a very good idea to have them there. For the non-resident quiz, who is a non-resident alien? Nobody really stood out there. So let's just make sure everything is good. Yep, we're all good. All right. Link and Learn is still under construction. It briefly came live this past weekend. Accidentally, the vendor made a mistake. There were a whole bunch of people that pounced on it. It is back shut down. It's not live anymore. They will promise that they will tell us as soon as it's available. All right. So we're going to do a quick review about who is a non-resident alien. Remember that a non-resident alien is anyone, well, an alien is anybody that's not a citizen of the US, either by birth or naturalization. A resident gets taxed the same as a US citizen. A non-resident alien is someone that doesn't have a green card or has not passed the substantial presence test. This is the test where we count the number of days that you were present in the year. If you met 31 days in 2024 plus 183, when you do some math on your last 3 years, you meet that test. It's a test that's done every year to determine your residency status. You could be a non-resident all year. You could be a resident all year. You could be this mixed up dual status alien, which means you're one of each for part of the year. All right. An exempt individual is somebody that doesn't count their days of presence towards that substantial presence test. Remember, not exempt from taxes, only exempt from the residency test. That exempt individual is an FJ MRQ student for their first 5 calendar years, not duration, just any part of a calendar year. It can also be a teacher or trainee on a J or Q non-student visa. And that's that confusing. If they were not exempt in 2 out of the prior 6, they will be exempt this year. Family members that are on the -2 visas use those same rules. This was that flow chart that was in the 4011 that kind of gives you a visual to how to do that. And a reminder, so that Form 8843 is to claim exempt days. That's what you're filing, is only if you're exempt, you're going to do that. All right, this is where we stopped. Are there any questions about this before we go on to new stuff? All right. Okay, so for any Shrek fans, right, taxes are also like onions, right? You have something that you think is the rule. You peel a layer back, oh, there's another little nuance on that rule. You peel back the layer, there's another nuance on that rule. So we are going to talk about the exemption. Oops, pardon me. There is a teacher or trainee further exception to the exemption. So teachers and trainees had that 2 out of 6 calendar years, but there is also a special rule where it might be more than 2 out of 6. Basically, if you were exempt for a teacher or trainee or student for any part of 3 or few of the prior 6, and the most important one, a foreign employer paid all of your compensation during 2024. You were present as a teacher or trainee for at least one of those 6 prior years. And during that time, in those 6 prior years, as a teacher or trainee, your all of your compensation was also paid by a foreign employer. So this is not a common situation. It's very rare. But imagine somebody that is like here doing postdoc research, right? They work at a university in another country. They come here to do some postdoc research, but that university still pays for them, right? They're doing some sort of a sabbatical or a program here. Then they go home, then they come back again and do that. That would be the type of situation we might see where this could be reality. It is not common, but it could theoretically happen. Does theoretically happen, but on a very 1 every 2 or 3 years kind of basis. All right, so if you are an exempt individual, you must file a Form 8843. If you have income that's subject to tax, then you will send that form in with your tax return. If you don't have any income, then you're going to just sign that form and send it in on its own. One of the really unique things about this form is that you do not have to have a Social Security number or an ITIN number. No tax ID number is required. I think this may be the only form for the IRS where you do not have to have one of those numbers. So we have sample forms up here. Hopefully everybody's already grabbed one. If you are a student, you're going to complete part 1 and part 3. Teachers and trainees are going to complete parts 1 and 2. The spouses and dependent children that are here on a -2 visa will fill out those same sections like their primary visa holder will. If you are filing it with the tax return and you had taxable wages, this form is going to be due on April 15th. Otherwise, it's going to be due on June 17th. Normally it's 6/15, but because of holidays, it's 6/17 this year. Even though it's officially due on June 17th, right? We're going to try to encourage everybody to file it as soon as they can, right? We don't want them to file, remember, or say, oh, I'll do it later, you know, after the semester ends. And then the semester ends and they're on summer break and they move on and they forget that they needed to do this. We want to try to get it done while we're in the middle of tax season, and they've got some help if they have any questions about it. All right, if you look at the form, we're going to walk through how you fill it out. Very simple. Start off with your name, first name. If you have a middle name, put the first letter of that. If you don't have a middle name, just leave it blank. Then your last name, whatever that is. If you have a taxpayer ID number, you put that in. If you are filling this form out on its own, so 8843 only, you're going to put your address here. Your address in your home country, your country of tax residence, and your address here in the US. So there's 2 addresses. If you're going to file this with a tax return, you don't need to put an address in there. That's only if you're filing it on its own. Next is going to be the general information. So this is going to be line 1A is your non-immigrant visa type for your most recent entry. That's going to usually be an F1 or a J1. Somebody that's coming in for an international student, they know about their I-94 travel history information from the USCIS. They can go out there, they can find that information. If they change their visa without leaving the United States, they would put their new visa number here or visa type here on line 1B. If they haven't changed, it's going to be their same visa type. So 1A is the type that you entered on most recently. 1B, your current visa. If you change, then it's going to be the change, and you're going to put the date of what that change was and the previous status. Line 2, what country or countries were you a citizen of during the year? What country or countries issued you a passport, and then your passport numbers. Then we get to do some math. Enter the actual number of days that you are present in the year during each of these calendar years. Also, please note that 2024 is a leap year, so there are 366 days in 2024. And then finally, enter the number of days in 2024 that you claim you can exclude for purposes of the substantial presence test, right? This is all of those days that they are here as an F or a J visa holder. So it's pretty common that students will come here to tour campuses. They'll come like in the spring sometime for a week or 2, and they'll come and start in the fall semester. So they would very likely have, say, 10 days that they cannot exclude from the substantial presence test. It's totally fine, right? Whatever the numbers are what the numbers are. Often they're going to be the same, but it's not always a guarantee. And that's one of the very common reasons for why. Part 2 is for teachers, researchers, and scholars. So for teachers, if they're a teacher only, they're going to enter the name, address, and telephone number of the place that they taught. For trainees, that's going to be all other J1s, name, address, telephone number of the director of the academic or other specialized program that they participated in. So if they're doing research, if they're doing something else, that's where it goes. Line number 7 is fun. So we're going to enter the...
Would you do anything with Bridgewater?
Can I say that again?
Because weren't you interested at one point? You were talking the process.
Yeah, if you can put your question in the chat, we'll come back to it here in a little bit, okay? All right, for line number 7, you're only gonna enter a visa type if it was a J or a Q. So if you were here as an F visa or a B visa or anything else, you're gonna only enter that. You're not gonna enter anything in line 7. It's only gonna be if you were on a J or a Q visa that you put in a letter there. And then line number 8, were you exempt as a teacher, trainee, or student for any part of 2 or the prior 6? Generally, you would say no, right? But that one exception to the exemption would be a situation where you could say yes, you're still exempt, even though you have been here for more than 2 out of that 6 years. For students, there's a little bit more information. So for line number 9, we enter the name, address, and telephone number of the academic institution. Line 10 is the name, address, and telephone number of the director of the academic institution or specialized program that you participated in. Generally, we suggest in line number 10 that students put their contact at their International Student Services Group. The way to think about this information is that this is how or who the IRS is going to call to try to confirm that you were a student here or a teacher or trainee at your school. So we want ideally a name, but most definitely a phone number and an address that we know is going to be valid. And generally that generic International Student Services address and phone number is something that is not going to change. And so even if the person changes, they can call that number and say, hey, I'm trying to verify a student, and they will be able to get that information. Individual professors or deans, they do move on from time to time. And so that name and that number may be gone completely from the university systems. For line number 11, we're going to enter, if you were here previously, you're going to enter that visa type, F, J, M, or Q in any of those years. And you'll notice this is, again, 6 years. Remember, for an F student visa or a J student visa, it's a lifetime exemption for that 5 years. So if the years go back beyond this, that's okay. We won't put anything in for those prior years. But those years still do count. It doesn't matter when they were, even if you were just a baby. All right, line number 12, were you exempt as a teacher or trainee for any part of more than 5? That should generally be no. Did you apply for lawful permanent resident status? Yes or no? Entering the green card lottery, the diversity lottery, is a no. You did not take any steps. If you win the green card lottery, that would be a yes. You have taken steps, and you would just say yes. You've taken steps, you're applying, but nothing's been finalized yet. All right. When you send this form in on its own, you will sign and date at the bottom of the page, the second page. One very important thing to know about signatures. So the IRS is very particular and very old school about signatures. They want a real pen on paper signature. If you put in like an electronic signature and you print it out, if they figure that out, they will not accept that. It has to be a real original, they call it a wet signature. So pen on paper signature is what they're looking for. And then the date, and you're good to go. All right. So what we're going to do is we're going to walk you through an example. I'm going to do one, and then you guys are going to do one here. For the folks that are online, the example scenarios that we have are out there in the training or in the reference information out in the Moodle course as well. For all of our scenarios, we are going to pretend that it is now 2025. So 2024 is done. It's dusted. We're through with it. And you can assume for each of these that we're going to fill this form with a tax return. So we don't need to do the address. All right. So I'm going to grab one of these. So I have Lisa's information. And we'll do Lisa. All right. Okay, yeah, Daniel, we'll fix that for you when we get done here. I'm sorry that it's not good now, but we'll fix it for you at the break, okay? All right, form 8843. Okay. All right, so here is the form 8843. So we are going to do Lisa's form. Lisa is very easy. She does not have a middle name, so we're not going to put anything there. She does have a social security number, so we're going to enter that there. It's a very creative all one number. She is going to file this return or form with her tax return, so we don't need to put anything in on the addresses. All right, Lisa is an F1 student, so we're going to put her visa as F1. Her most recent entry was August 31st, 2023. So that's the date that we put there, her most recent entry. She has not changed her visa since she came in. She's still an F1. She is a citizen of China. China issued her passport as well. Her passport number again is the very creative 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, now we get to do some math. So 2024 is very easy. right? 366 days because she was here the entire time. Then see here, I'm gonna have to just write it down here. So for 2023, so any part of a day counts for this test. So we are going to count 531, even though that was the day that she left. We are going to count 831, even though that is a day that she came back. So she was gone 6-1 through 8-30. So there were 30 days in June, there were 31 days in July, and then 30 days in August. So that's 91. 365 minus 91 is 250, nope, 74. 274 days. All right. And then for 2022, so she came here on August 1st, 2022. Yes, I will admit that I chose those dates to make life easy. So 31 days in August, 30 days in September, 31 in October, 30 in November, 31. That's 3, 2, 5, 153 days for 2022. Is wrong? Ah, okay. Let's go take a look at it really quick. Oh, that is not the right thing. Oh, I put the training thing out there, didn't I? All right. Let me fix that here. Give me 2 seconds. Wait. Let's do this. Um, Actually, I am not going to try to fix it now because it's going to take too long. I am sorry about that, everyone that's online. We'll fix it when we have our break, but for now, I'm sorry, you're going to just have to follow along with us here through the share. So again, I apologize.
In the chat, I put the link to the form if that's what you're looking for.
Okay, thank you. That's very helpful. Thank you. All right, we're going to share. We're going to go back to here. Going to go back to here. All right. We'll put that there. We'll put that there. Put this little house. All right. Can you still see online? Can you still see the raw data and the form? All right. Okay. Yes, thank you. Okay. All right, so number of days in 2024 that you claim you can exclude for the purposes of the substantial presence test. That is going to be all 364, right? Because she was not here for any days that she was not exempt. She was here on her F1 visa for the entire time during 2024. All right, she is a student, Lisa is, so we're going to skip part 2. We're going to go down to part number 3. She is a student here at the University of Minnesota. The address is 301 19th Avenue South, Minneapolis, Minnesota, 55455. And then the phone number, very important, 612-626-7100. Her contact, this is a real person. This is the real contact that we can put for University of Minnesota students, which is Megan Carms. Again, 301 19th Avenue South, Minneapolis, Minnesota, 55455, 612-626-7100. All right. Now for her visa type. So she was here in 2022. So we can put F there. We can also put, we can F, we can only put F. All right, were you exempt as a teacher, trainee, or student for any part of more than 5 calendar years? The answer is no. Did you apply for or take any affirmative steps to apply for a permanent residency? No. All right. So that is Lisa's form 8843. Right, so it's relatively straightforward. Basically, some information about her visa and her days of presence here in the US in the very first part. And then part 3 for a student, it's going to have information about her school and how long she's been here on an F visa or J student visa. Okay. Question, yes.
On one day, should we do the August 31st or August 1st?
So on 1A, we are going to put her most recent entry. So which is the August 31st date. Yep. Yeah, so this is one that's actually has changed a little bit. The instructions used to be very vague. And last year, pardon me, last year they updated the instructions to make it very clear that you are supposed to put the most recent entry there. All right. Any other questions here? Any questions online? All right. Okay, so what we're going to do now, I'm going to pause the recording and we are going to get back to it here. Okay, so, all right, so you are going to get more practice doing Form 8843s. There are 2 examples in Moodle for you to do as assignments. This is your first introduction to our friends, Lisa and Harold. They meet a couple of other people in the next week. And with that, we are going to move on to federal tax for non-resident aliens. So we have identified who is a non-resident alien. We've said, okay, you are exempt from the substantial presence test. If you are exempt, you have to fill out this form 8843. And that also means you're a non-resident alien, right? Which means that you are not a US tax resident. A resident alien is a US tax resident. A non-resident alien is not. That means you must be a resident of a different country. What country could that possibly be? Well, usually we're going to look at where you were living before you came here to the US. Often this is going to be the same country that is your citizenship and your passport, but not necessarily. People have 2 passports, 2 citizenships, so they may have more than one place. But if it's not where you are living, we would also look to things like your place of employment or business. Where is your permanent home? Where is your family? If you want to really get into the nitty gritty, the Organization for Economic Cooperation and Development has a whole big reference table of all of the tax requirements for residency for many 200 plus countries. So you can go there. Generally, it's pretty straightforward. I would say like every once in a while, we find somebody who went somewhere and lived somewhere either for a long time or not, and we have questions about it. To give you a few examples, let's talk through these. So Lisa attended boarding school in France before she came to the US in college. Her family lives in China. She has Chinese citizenship and passport. She returned to China during the summer. She was only temporarily gone for school. So I would say that she is still a tax resident of China, right? It was a temporary absence. She was not living there. That was not her home. She was just there to go to school. She always came home between breaks. Harold, that lucky bum, went to work at a ski resort down in New Zealand for 5 months before he came to the US. His family still lives in Norway. He's got Norway citizenship and passport. Still going to be a temporary absence, right? Even though he was working, it was not a long-term move. It was just temporary. He was going to get some extra money, bum around a little while, have some fun before he had to get back and get serious. Whoa, Maria, stop doing that. Alma is a different story. Alma was originally from Syria, but she left with her family and has received asylum in Germany. She's lived there for 2 years before coming to the US. She is a Syrian citizen. She has a Syrian passport, but she does not know if or when her family will be able to move to Syria. Based on that situation, I would say that Alma's residency is now Germany because that's where she's been living. She's been there with her family. It's for an extended period of time, and she does not know if or when she's going to be able to go back. All right. Generally, most situations are pretty straightforward. Again, if you ever have any questions, you can always talk to your site coordinator. All right, so let's talk about taxes. So if you've been here for the resident training, you already saw this slide. But for those that are doing non-resident only, I don't know if it's the nice way to say it, right, is taxes are an experiment in social engineering. We've had 100 years of governments making rules to say, oh, we think that this is great. Let's get people to do this. We will give them some money off on their taxes if they do that. This applies to both federal and state governments. And over time, this has resulted in various deals, tax reductions, credits to encourage behavior for things like getting married, having kids, buying a home, going to college, and on and on and on and on and on. And as the different rules become into power, they change the rules that were there before. So it's very complicated, and that's why we are here. It's also resulted in a system that is also very dependent on an individual's personal situation for their taxes, right? So if you look at the person sitting next to you or the person next to you in the Zoom, right? Even if they earned the same amount of money that you did, chances are that they are going to have to pay a different amount of tax just based on their personal situation. When we look at what the general tax equation is, we're going to come back to this, but we are going to start with income. Subtract adjustments, subtract deductions, subtract exemptions to get taxable income. Take that times the tax rate to find our total tax. We'll subtract credits, we'll subtract withholding and estimated payments, and we'll find out if we get a refund or if we still owe money, right? Those are the fundamental building blocks of how we do taxes. Now we're going to walk through those. Tonight, we're going to focus on income for non-resident aliens, and we're going to focus on treaties because this is my favorite part about non-resident alien taxation. Treaties can change basically everything on that equation. So that's what we're going to look at. So just to do a general definition. So income, money coming into you, right? Very straightforward. Adjustments, those are going to reduce your income based on money that you have spent or saved, right? The government said it was great for you to do this. We'll give you some money off your taxes. You don't have to pay tax on that amount. Exemptions reduce your income based on people. The value for those are currently 0. The current tax law is set to change and make that number be non-zero in 2025. Unless the new tax administration changes the rules again. So we have no idea what it's going to look like next year. But for this year, at least, it's still, people don't affect your taxes. You don't get any money off because of them. The next thing is a deduction. So a standard deduction reduces your income by a set amount. This sounds fabulous. Unfortunately, only students from India get to use this. The reason why? It's in their tax treaty. That's the reason why they get to do it and nobody else does. Everyone else will itemize their deductions, which again, reduce your income based on money that you have spent on particular items. The tax rate is the percent of income that's paid in tax. The US has a progressive tax system. So as you earn more money, you will pay more tax. It starts at 10%, it goes to 12, it goes to 22, and so on and so forth. Credits are going to reduce the amount of tax that you owe. Some will only reduce your tax down to 0. They won't give you any money back. That's called a non-refundable credit. Some will actually give you extra money back. That is a refundable credit, and those are the good ones. Withholding is when they have money taken out of your income and sent to the tax authorities, to the IRS for the federal taxes, to Minnesota Department of Revenue or one of the other state revenue organizations. but it is not sent by you, the taxpayer. It is sent by whoever was giving you that money. On the other hand, an estimated payment is when you send that money in. You say, I know that I'm going to owe a bunch of money, so I'm going to give them some of it now so that I don't have to pay any interest and penalties, and so that I don't have to pay like a huge amount when I file my taxes. All right. Treaty provisions are listed in general in publication 901. Tax treaties will override the US tax law to either exempt income or to impose a different tax rate. So that 901 has summaries of provisions. And to get the real details, you can go into the treaty to the actual treaty law. As we start to get into this, I'm going to give you a reminder about scope, because and I'll talk about this pretty frequently. Right? So as a VITA clinic, we would love to do it, but we cannot help everyone, right? Our goal is to help as many people as we can, but we do focus on those people that need our help the most, right? I'm going to look at somebody and say, okay, if you have $20,000 of income and the person next to you has $200,000 of income, probably that person with 200,000 can find a way to hire somebody to get some help with their taxes, whereas the person with $20,000 of income is going to struggle, right? That's one example of how the IRS chooses to decide who is a part of the VITA program. They also do it based on things like types of income. More complicated types of income are not included in the VITA program. So if somebody is dabbling in cryptocurrency, we really hope for their sake that they made lots of money at it so that they can hire somebody to go do that tax return for them. Same thing with some types of businesses like driving for Uber. That becomes very complicated. That's out of the scope of our training. We can't help them. When we talk about an item like that in our training, I will usually highlight it in red so you know that that is why we can't do it, is because the IRS says that we can't. Sometimes our software has limitations as well. We're going to also identify those as red. That's where one of the income limits comes in. I don't know what the number is this year, but last year it was $79,000. Anything more than that and the software just will not work. It's hard coded in there. We can't do anything about it. For some topics, you will need to have dual certification, foreign student plus the advanced resident test. It looks like there's a big number of people out there. That's super exciting. We'll identify those items in green. We as an organization, North, and with our partners also do put some limits on things as well. So for our support, so because we are focused on international students, scholars, teachers, and researchers, all of those F&J visa holders have to have a sponsoring organization to bring them here to the US. And those organizations are colleges, universities, elementary, high school, government programs. So schools, nonprofits, government email addresses. There is nothing in the software other than some like hard limits like the income that's going to stop a client from doing something that is out of scope, which is great. I'm really glad that you can use the software to do that, but I can't help you as a volunteer. I can't tell you how to enter it in the software. I can't tell you that your overall return is correct. I can't tell you that that part of it is right. I can talk to you about the stuff that is in scope for us to help with. And we can't recommend a paid preparer. We can say everything that we can talk about looks great. This part is out of scope. I emphasize it a lot, right? Because it's not like we can just, nothing's to stop you, right? Just like with Joe, I can't stop you before the fact. That's why we have to educate you about the importance of the scope limitations, where those lines are, make sure that you feel comfortable in understanding where they are, make sure that you know where to go to get any help, which is going to be like your IRS reference materials and your site coordinators, so that you're going to always stay on the right side of the law. Okay, so with that, let's move on to income really quickly. So when we talk about income for non-resident aliens, the first question that we want to ask is, where does that money come from? If you are a US resident, it doesn't matter where the money comes from. The IRS wants you to pay tax on everything. But if you're a non-resident alien, foreign source income is generally not going to be taxable for you. This includes gifts from parents, wages worked at a job in your home country, scholarships from home country governments or organizations. Foreign source income is out of scope. That would not be part of us. But generally, only US scoped income is going to be taxed. But remember, if it's money coming in and it's here in the US, learn from Joe, it is going to be taxable. It does need to get reported on a US tax return. Let's talk about the next topic, which is effectively connected versus not effectively connected. So when the IRS looks at how to tax the income that a non-resident alien receives, right? We know that this person is here temporarily, perhaps on a visa. Is that income connected to why they are here in the US? So what is a trade or the business of our clients, right? They are here as students or teachers or researchers. So income that is connected to being a student or a teacher or a researcher is effectively connected income. That's going to include things like wages from working as a student, getting an internship, doing research. It also includes US sourced scholarships, so somebody can go to school here. Not effectively connected income is going to be things that are not related or not a requirement for them to be here as a student or teacher or researcher. So that'll be things like investment income, right? Yes, there are lots of finance students that will say, oh, but I have to study this stuff because I'm studying finance. Yes, but you don't actually have to trade to study finance. You can just create a pretend portfolio. If you're actually trading, then you're trying to make money. That's not a requirement of any enrolled class. Likewise, if they were lucky enough to have a book that was published, they could get some royalties. There can be other types of income, such as pensions or Social Security benefits. That would be extremely rare for us to see, but it would be theoretically possible. Gambling winnings very occasionally do happen. Somebody goes to a casino and wins at a slot machine or whatever. If it is not effectively connected, it is generally going to be taxed at 30%. So that is a pretty high level of tax. Remember, individual income taxes start at 10%. This is all going to get taxed at 30%. There is an exception to this, which is bank interest. So bank interest, like from a savings or a checking account or a CD, is not going to be taxable income for non-resident aliens. It's not taxable and it's not even reportable. If they were into investments and they bought like bonds, like imagine like state or city municipal bonds, that interest would be taxable potentially. But bank interest by itself, not taxable income. Wage income. So if you are working at a job for an employer, the source of that income is based on where you do the work. So if you are here in the US working, it is going to be US income and it's going to be taxable. It does not matter where the company is that is giving you the money. It matters where you were doing the work. So if you are working remotely in your home country, that income is generally not going to be taxable. This is not as common now, but it was common certainly over the pandemic period. Might be taxable in their home country. We don't know. We're not trained on those. Theoretically, that company should know that they're a non-resident alien and not report any of those wages on a US income tax return form, like a W-2. If it is, or if it's not, that is not something, unfortunately, we can help with. That is out of scope for the VITA program. At the end of the year, after the calendar year is done, an employer will send a W-2 form that shows the amount of wages that somebody has earned. It'll also show the amount of tax that has been withheld on their behalf. Usually this is pretty good. There are some special inclusions, but they are pretty rare. All right, self-employment income. So if you are not working for a company, if you are working for yourself, if you have your own job or gig, that is what the IRS considers self-employment income, or working as an independent contractor. This does happen on some internships. This does get much more complicated. Basically, the income is coming from performing services or selling goods. Qualified expenses can be deducted against that income. Generally, it's going to be taxable if you're doing that work here in the United States. If you are working for a client, you will often receive a 1099 NEC. That's what a lot of our internship people might do. The company is required to provide that form if you earn more than $600. If you earn less than $600, you still have to report that income, even if there is no form, right? Don't be Joe. Unfortunately for us, or fortunately, because it makes life a little simpler for us as volunteers, self-employment income is out of scope for 1040 NR returns, for non-resident returns. If you are doing the resident side, it is in scope under some circumstances for resident returns, but for non-residents, it is out of scope. So if we have somebody that comes, we cannot really tell them where to go, how to do that, but we do have a couple of resources that we can point them to that'll give them some guidance. All right, let's talk about treaty benefits, my favorite. So publication 901 or 4011, this is 4011. Everybody has the link for that online. We will have paper copies for everybody here in a week or two as well. So independent personal services, by treaty definition, means self-employment income. Dependent personal services are wages. Compensation during training is also wages. A lot of the treaty provisions have a requirement for who is paying you. It could be either somebody that's outside of the US, it could be somebody that's in the US, it could be only like an educational organization. So look at those treaty requirements when you go through it. Our clients can file a form 8233 to tell their employer about a treaty provision that they have. They can say, hi, I am Lisa. I am a student from China. I have a $5,000 treaty exemption for wages earned while I'm studying or training here in the US. That employer will say, great, Lisa, that's wonderful, congratulations. So for the first $5,000 that they earn, they're not going to take out any tax because they know that's treaty exempt. After they earn more than $5,000, every dollar more, they will start taking out tax again. Then at the end of the year, that employer is going to send Lisa a 1042S form that has her money that had that special tax treatment applied. That's her treaty exempt income. And then a W-2 for everything else that didn't have that special withholding. Treaty exempt income is not going to be on the general part of the forms. It's going to go on its own special line. It doesn't ever get like added in. In an ideal world, it doesn't ever get added in and subtracted out. It's just always kind of gets reported on the side. All right, let's talk about how does this actually look in our forms. So I'm going to show you the exact terminology of the US-Norway treaty example, just to bring Harold's example into it. And this is what it says. Article 16 for students and trainees, an individual who is a resident of one contracting state at the time that they become temporarily present in the other contracting state. And it is basically hard to parse. So if you ever do need to go look at a treaty, my first recommendation to you is cross out the contracting state and the other contracting state and replace it with the actual country names, because it becomes much more understandable to say, okay, somebody that is a resident of Norway that comes to the US to study to school here at an educational institution in the US is exempt from tax in the US for amounts for not exceeding 5 years from the date of arrival, including income from personal services, right, for wages in an amount not to exceed $2,000. Right? So that's how we can see Harold also gets a deal. He has $2,000 of income that he can earn in wages that he will not have to report or not have to pay any tax on. He'll have to report it, but he doesn't have to pay tax on it. 901, publication 901 summarizes these. They basically say, here's Norway, an individual who is a resident of Norway, so on and so forth. Income from personal services for up to $2,000 each year. Individuals entitled to the benefit of this exemption for a maximum of 5 calendar years, or 5 tax years, pardon me. Notice that The real treaty actually did say something slightly different. It says, for a period not exceeding 5 taxable years from the date of his arrival, right? So it's not just any 5 years that Harold wants to choose. Although it's not said it here, it's actually starting from the day he arrives. Those are the first 5 calendar years, and he gets that exemption. There's a treaty table that summarizes this even more. And there's a publication 4011, which is what we'll hand out. And it's super summarized. It basically says Norway, 5, 2000, and then the treaty number, treaty article. That's really all it says. But that's to say, the reason why I kind of give you this example is to say that this is a very summarized version of what the tax treaty says. Generally, this is going to be enough information, but if there ever are any questions, we're going to step back through the layers of accuracy. 901, then back to the treaty itself if we need to try to understand if there is a question about whether we're entitled to a treaty exemption or not. Why do I get that? Why do I not get that? That's how we can provide that information. All right, let's talk about common income documents. I've mentioned a couple of them, right? This is a W-2 form. If you haven't seen one of those, this is what it looks like. Basically, it's got your social security number, your wages, tax withheld, your information, your name and address, employer's information, name and address. There's information on other taxes that are withheld, including state taxes. There's a bunch of boxes here for like other things like healthcare costs and savings and retirement savings and all that kind of stuff. A 1042S form, right? This reports it's officially a foreign person's U.S. source income subject to withholding. The really important boxes here are boxes number 1 and 2, the income code, and then the gross income. Then we'll look at federal tax withheld. There's a whole bunch of other boxes. A lot of these are generally not going to be filled out. This form is used for many, many situations for people that have like investments here, that own rental real estate, that own real estate investment trusts, all kinds of situations where a foreign person might have some US income where they would have withholding tax. So when we compare the forms, the W-2 income for wages, working as an employee, 1042S income that may be subject to a treaty or special withholding treatment. W-2 has withholding on a W-4. The 1042S withholding form is an 8233. On that W-2, the employer is going to use a set of IRS tables to estimate the amount of tax that people owe. It is not the actual tax calculation, right? Remember, your tax calculation is based on a lot of personal factors. Your employer is not necessarily going to know how many kids you have. Are you married? Do you have a house? You know, do you have student loans? They're not going to know any of that stuff. They're just going to use these rough estimate tables to say, oh yeah, we should take out X amount. For the 1042S, the employer is going to use a special withholding rate based on whatever you told them, right? That form 8233, that's the legal permission for that organization to do special tax treatment. On a W-2, state taxes are often withheld as well. That is basically never the case on 1042S. There is a spot for it, but I've never seen it filled out. On a W-2, you can have FICA taxes withheld as well. FICA are Social Security and Medicare taxes. 1042S, FICA taxes are not withheld. One of the most important things for you to know, and the reason for a lot of the work that we're going to do here to teach you about non-resident taxes, is that the income form by itself does not determine your tax residency, and it does not determine a treaty benefit. This often can mean that income documents are not like theoretically right. Somebody could have a tax treaty, but not have a 1042S document reporting income that is treaty exempt. They can still claim that treaty. That treaty is there, is valid, it still counts. They just don't have an income document. So we have to do adjustments, or rather the clients have to do the adjustments. We have to help them with that process to make sure that they've done it right. All right, so I said that boxes 1 and 2 are the most important ones. Box 1 is that income code. That basically tells you what kind of income the organization that gave that student that money says they think it is. Theoretically, they should receive a 1042S for like treaty exempt income, but it doesn't always happen. But we will rely on that organization for determining the income type. So if the school says that it's wages, we're going to believe that it's wages. If the school says that it's a scholarship, we're going to believe them that it's a scholarship. And if the student is completely convinced that it is not, they need to go talk to the school because we can't change that information. That W-2 and that 1042S, those have already been sent to the IRS. And the IRS is going to look to match that information with that individual's tax return. And they are going to not give them their refund if that information does not match. The most common codes that we're going to see at our tax clinics are income code 16, which is for scholarship or fellowship grants, code 19, which is for compensation during teaching or research, and code 20 for compensation during studying and training. And those codes and the summaries of the things are here in the 4012. All right, let's talk about more treaty fun. So the Fabulous Six Treaty have a very special provision. This provision says that you do not have to pay any tax at all on your income as a teacher or researcher, no matter how much income that is, for the first 2 years that you are here in the United States. And this one is a calendar year. It's not a duration year. It's not a calendar year. However, if you stay even 1 day into that 3rd year, you will owe tax on the entire visit. So it's called a retroactive elimination of that provision. So if you're here for 2 years or less, you're good. If you were here for more than 2 years, that treaty benefit goes away. You owe tax on everything. Yes, this does mean sometimes people get it on a plane, they go home so that they don't have to pay a whole bunch of tax. Those fabulous countries are India, Luxembourg, Netherlands, Thailand, Pakistan, and the UK. If we see a teacher or researcher from one of those schools or one of those countries at our tax clinics, we will want to try to remember to ask them, how long are you going to be here? Are you going to be here more than 2 years or less? Do you know? Are you not sure? Because that will affect what they want to do. Because if they stay more than 3 years, they will owe tax on everything. So they should know before they claim the treaty. Canada also has a super cool treaty provision. If you earn wages and you're from Canada and you earn less than $10,000, you do not have to pay any tax on those wages. However, if you earn more than $10,000, you pay tax on everything. So it's kind of a big threshold. Less than 10,000, no tax. Above 10,000, tax on everything. Germany also has a unique treaty benefit or treaty provision. Their treaty provision for wages is also retroactively eliminated if the 4-year period is exceeded. So it is a much smaller time period for Germany students. A lot of our treaty provisions are for 5 years, but Germany is for 4 for those wages. And then finally, China, they have an awesome deal. The student exemption of $5,000 continues even after you become a resident. So you don't have to just be a non-resident alien. You can still be a resident now and still get that $5,000 off, which is a really cool deal, as long as you are still a student. And then teachers and scholars, they get 3 years instead of the normal 2 for the unlimited amounts. All right, so we're going to go through a couple of examples. I'm just going to talk through those in the interest of trying to get us through on our time. So Roberto is a J1 student. He's a non-resident alien from Italy. He came here in 2022. In 2024, he earned $9,500 as a teaching assistant. How are his wages going to be treated? All right. One of the important things to know is that it doesn't matter necessarily what he did. So he was working as a teaching assistant. That's great. but he is still here as a student. His visa is here as a student. So he is going to use the provision for students. He is not going to use the provision for teachers because that is not his purpose here. Right? His purpose here is really to study and to get a degree. The teaching assistant job is just a part of that. So if I look at the publication 4011, I look at the table for income code 20, which is benefits for studying and training, and I try to find Italy, and I do not find it. So that means that he does not have a treaty. He's going to have to pay tax on all of that income. Rhonda is a student from Poland, right? She also earned $9,500 in 2024. What about her? Is she going to have to pay tax on all of that? I look at my treaty table and I see she has a treaty exemption of $2,000. So she is going to pay tax on $7,500. She's going to pay zero tax on $2,000, right? Reggie is from Canada. He also earned $9,500, right? How is he going to pay? How is he going to be taxed on those? That's right. He's not going to pay any tax. So we have 3 students in almost a same identical situation, right? They're all students here. They all work. They all earn the same exact amount of money, but they are all 3 paying very different amounts, right? Reggie loves us. He thinks we're the best in the world because he doesn't have to pay any tax. Roberto hates us because he has to pay tax on everything. And Rhonda is like, okay, yeah, I'm glad you guys came. You saved me a little bit of money, right? But this is the challenge that we have with our students because they're going to have very different outcomes. And so when they talk to each other, and many of them often do, there can be a lot of misunderstanding and miscommunication because of the different treaty benefits that apply. All right. We're not going to worry about thumbs up or applause. We're going to just look at Frederick, who's on a J1 visa. He is here to do teaching and research. He is going to stay 3 years. How is his treaty going to be treated on his tax return? All right, so he came in 2023, so 2024 is his 2nd year. He is still a non-resident alien. The treaty provision for income code 19 for Germany says 2 years and no limit on the money. So he does not have to pay any tax on any of that $45,000 that he's going to earn. It's all going to be tax-free. Next year, though, he's going to have to pay tax. Mary is here. She's from the UK, right? She also plans to stay 3 years and is also paid $45,000. How is her income going to be treated? You may remember that UK is one of the fabulous 6 that I mentioned, right? So she says that she's going to stay. In that case, her treaty benefit is going to not be there for her. So she needs to just go ahead and pay tax on this income, not claim her tax treaty. It is not mandatory to claim a tax treaty. You do not have to claim one if you do not want one. There is nothing wrong with claiming a tax treaty, right? You do not have to pay more tax than you are required to pay. So you can follow all the rules, all the laws, and pay the minimum amount of tax possible. But for Mary, if she's going to stay, she's going to pay tax on all of it. All right. Ed, J1 non-resident from Canada, he's also earning $12,000 in wages. He's going to pay tax on all of it, right? Because it is more than that $10,000 amount. So he's going to owe tax on everything. All right, so that is income. We're going to talk about a couple more things here. The next one is taxable refunds. And this is a slightly circular topic, so I'll try to get that through. All right, so I talked about deductions. They reduce your income. You don't have to pay tax. If you're from India, a student from India, you can take the standard deduction. Everybody else has to itemize. You can subtract your income, the amount that you pay on certain items, including state income tax. So the money that you have to send to the state, you don't have to count that in your income when you pay federal taxes. However, if you get a refund of some of that money back, right? So you didn't count it on your federal, but now you get a refund on a part of it. the federal government says, hey, wait a minute, you didn't count that, but you should have. You didn't actually pay that to the state. You have to add that back in the next year. This is very state specific because a lot of states don't have a state income tax, including Washington, which is one of our big partners. Pennsylvania has a flat tax, so almost nobody gets a refund or owes state tax, which is fabulous. Minnesota changed their tax rules in 2020. Most people don't get Minnesota tax refunds as well, but there are some that do. Of those that do, a lot of those are also students from India who didn't itemize in the first place. So this is not a very common situation to have you itemized last year, you subtracted your state income tax, you got a state tax refund of some portion of that, you have to add it back into your tax as income in the next year. All right. This is an example just to walk through the numbers, just so you can kind of see how it works. We can pretend, so we had wages of 10,000, we had Minnesota tax withheld of 500, so your taxable income was 9,500. On your Minnesota return, you actually owed only $400 of tax. You got a $100 refund. So that $100 would need to get added back into your federal income tax for the next year. All right. We'll do an example with this, at least one example in our scenarios when we get to them. There tend to be questions on the test about this as well. So we want to make sure that you've seen this before. All right. The next big one that we're going to see a lot of are scholarships and fellowships. All right. Somebody gives you some money to go to school. That is super awesome. Income in the form of a scholarship or fellowship can be treated one of three ways. It can be excludable under the Internal Revenue Code. If you have a scholarship that meets that requirement, you don't have to file a return if that's your only US source income. The second way it can be treated is it can be exempt by a treaty. And then the final way is it can be taxable. Remember, this is only going to be for scholarships from the US. If it's a scholarship from their home country or an organization outside the US, we don't care about it, right? We pretend like what happens outside the US stays outside of the US. We don't worry about it. So the Code 117 exclusion is for what's called a qualified scholarship. There are some criteria. The student must be a candidate for a degree. The payment must be for tuition or required books or supplies. The school must be a qualified education organization through the Department of Education and a few other things. But generally, if they're here as a student, as long as that payment is for tuition or required books or supplies, then it's going to meet the requirements for a qualified scholarship. For people that get one of those, the scholarship provider does not have to provide a document to tell the student how much that was. They only will include the amounts on a form if it is a taxable scholarship or a non-qualified scholarship. If somebody thinks that there's an error in that between what their income document says and what the actual amount that they paid or were received, student account information is the place to start. Look, because that'll show the tuition payments, it'll show scholarship payments, it'll show all of the charges. You can try to net those out to make sure that everything matches. All right, again, scholarships or fellowships. So if it is not for tuition, or if it is not for required books or fees, you still might not have to pay tax on it if you can claim a treaty exemption. Publication 4011 has the list of tables. These are going to be scholarships from a US payer, which basically means a school here in the US or an organization as a US. It must not represent payment for services, right? If you have to work to get that scholarship, that's not really a scholarship anymore. That is wages now. It's generally going to be reported on a 1042-S for a non-resident alien. And it's not going to get reported as true income on the tax return. It's going to get reported as treaty exempt income as well. For almost all treaties it doesn't matter how that person spent the money, right? If they get a fellowship to pay for their living expenses to go to school and they decide that I really, really, really have to have a spring break down in Miami, they can spend the money on a spring break down in Miami and they will not have to pay tax on that. There is one exception, the Commonwealth of Independent States. Their treaty does have a limit on the amount, and it has to be spent on, I think, like ordinary and necessary living expenses. So probably a spring break trip would not count, but rent would count, groceries would count. A winter coat in Minnesota would most definitely count. Everything else is going to be taxable. Generally, it's going to be shown on a 1042-S. You're going to report it on the form. You're going to have to pay tax on that money. So that's kind of crappy that you have to pay tax on that. But at the same point in time, hey, right, somebody loved you enough to give you a bunch of money to come here to school. So we're sorry that you have to pay tax, but you still got a bunch of money and we're happy for you for that part of it. All right. I'm going to skip these examples because we're getting late on time. We're going to talk about interest, dividends, and capital gains. Remember, these are going to be things that are not effectively connected, right? You do not have to receive dividends to go to school here in the US. You do not have to buy and sell assets to go to school in the US or to teach or do research here in the US. Dividends, again, amounts paid by a company to the shareholders. We made lots of money. Here's some of it for you. Capital gains, you buy something like a stock, then you sell it. If you make money, that's a capital gain. Bank interest, again, is generally going to not be reported, excluded. Usually there will not even be an income document, but even if there is, they don't have to include it on their tax return. One important thing to know is that for people that are doing dividends or capital gains, those are not going to get reported on the same form that a resident uses. They're going to get reported on Schedule NEC, not on Schedule D for capital gains. Again, the tax rate is generally going to be 30%. There are treaty benefits, but they are out of scope according to the IRS for dividends. Treaty benefits for capital gains are in scope. Don't know why they draw the line there, but that's what they did. Generally, most dividends are not going to be treaty exempt. A lot of them require things like regulated investment companies or real estate investment trusts. There are a few places that do have decent rates that are less than 30%. We can't tell them about it, but we can maybe point them to the publication that talks about the treaty exemptions or the treaty rates so that they can see that and apply those if they apply. Capital gains. So one important thing. So anybody that is a non-resident alien that is physically present here in the US for less than 183 days does not have to pay capital gains tax. This 183 days is separate from the substantial presence test, exemption from the substantial presence test date. This is only about literal physical presence here in the US. For everybody else, they're going to generally pay 30% unless a treaty rate applies. Again, that's in the 4011. Our most common countries all have a treaty rate of 30%. So generally, it's all going to be 30%, but there are a few that have it. Here's an example of what Ireland's one looks like. Basically, it talks about gains, it talks about real property, it talks about gains from ships and aircraft and containers are only taxable in one place. And the taxable for everything else is only taxable in the contracting state where you're a resident. So if somebody is lucky enough to be from Ireland, they can trade stock all they want. Hopefully they'll make lots of money. They don't have to pay any tax on it. All right. And I'm going to skip this as well because we're right at 7 o'clock. And I'm going to ask if there are any questions about income. I know that I went kind of fast through that. I know that it is a lot of information. I apologize for that. Buckle up, we're going to do it again for residents. But anyway, any questions about income? We're here in the room. Any questions online? If you have a question and you want to put it in the chat. Let me look at the times. Okay. What if their income is from a business which they are running in their home country? If it is in their home country and all activities for that business are done in their home country, right? And they're a non-resident, then we pretend la la la, it doesn't exist to the US government. We don't worry about it. If they are here doing stuff to run that business, even though like the business is over in their home country, but they're online doing things, then they're here working in the US. So that would most likely be income that is associated with a fixed base in the US. And then Kathy won't owe tax on everything if they have itemized deductions. Ah, yes. Yes, thank you, Kathy. You're my conscious and correct person all the time. Okay. All right, we're gonna do this really quick and then we're gonna break, okay? So for this, so everybody should have been invited to Moodle. If you don't have it, send me an email. That is the wrong link. Don't click on that link. It's not gonna work for you. I apologize. I will get that fixed. Whenever Link and Learn goes live, it should be soon because, like I said, they went live and accidentally, and it seemed to be working for people. So that was a good sign. For your next assignment, so if you haven't already done so, you need to get through modules 1 through 4. 1 is that volunteer data. Let me know if you want to do resident. Let me know what languages you speak, what kind of format you want for your tax events. 2, 3, and 4 are about standards of conduct, intake interview, and then who's a non-resident alien. Module 5 is going to be Form 8843. You're going to do 2 sample forms, one for Nick, one for Elena. And then Module 6 is a quiz, income, and tax treaties for non-resident aliens. All right. Okay. All right, with that, we are going to take about 5 minutes. We're going to come back at 7:06 and start up on the resident test, resident material, not the resident test. Stop recording.